Hi class, today we are going to begin chapter 14, which is one of my favorite. It's all about retailing or retail stores. So let's go ahead and get started. Retailing, it's all activities directly related to the sale of goods and services to the ultimate consumer for personal, non-business use. So it's for when we use it in our personal usage. And a retailer basically is a store that sells to consumers, not to suppliers, not to other businesses, but sells to us consumers. The retail industry in the United States is comprised of mostly small businesses, but it's dominated by a small number of large companies. So the statistic is the 80-20 rule, but I think it's more like a 90-10 right now, where 90% of the businesses in the United States are small businesses, but those 10% that are not small businesses are the ones that are dominating the industry, like Walmart, Target, Costco, those companies. Approximately 66% of the U.S. GDP, gross domestic product, comes from retail activity. So if you've taken economics, you'll know a little bit about that. So retail establishments can be classified based on the type of ownership, the level of service it offers, the product assortment, and the price. So it can either be an independent retailer, which is a retailer owned by a single person or partnership and not operated as part of a larger retail institution, while a chain store is a store that is part of a group of the same stores owned and operated by a single organization. So one thing this doesn't talk about is franchises, which is a relationship in which business rights to operate and sell a product are granted by the franchisor to the franchisee. Yes, I know what you guys are thinking. McDonald's is a prime example of this. So McDonald's, the corporation, would be the franchisor. They're the originator of a trade name, product, methods of operation, and the like that grants operating rights to another party to sell its product. So that's the main McDonald's corporation. While a franchisee is that owner of that restaurant that pays McDonald's to give them the correct product and tell them how to make each thing. So that's the individual or business that's granted the right to sell that franchisor's product. Level of service. So we have full service to self-service. So think of gas stations. You can pull up to a gas station and you have full service where somebody comes and they pump your gas for you. Now that gas might be a couple pennies more per gallon, or it might be customary to tip the person that is pumping your gas because they are providing that extra service for you. But then there's also self-service where you pump your own gas like Sheetz or Turkey Hill. Another thing you can think about with level of service is, does the shop provide alterations? So if you buy a suit or a dress there, will they alter it there? Will they provide store credit, delivery, consulting, liberal return policies? Kohl's is known for its very liberal return policies. Does it have layaway? Does it have gift wrapping? Boscov's is one company that has its gift wrapping still in the back and it's free. You just take your bags back, but you keep your receipts obviously, and they'll wrap all of your gifts for you as long as they're from Boscov's. And it's free. And then there's personal shopping. So that you might see in places like New York City where you go in and you have a personal shopper that helps pick out your clothes. Then you have product assortment. That's based on the width and depth of product lines. Width is the assortment of products offered. So think of a grocery store. Tons and tons of different products. They have a produce, they have a bakery, they have a deli, they have general goods, they have everything you can think of. Depth is the number of different brands offered within each assortment. Think of the cereal aisle. How many different brands of cereal does Wise have? And of those brands, how many sub-brands or types? Think of Cheerios. Cheerios is part of General Mills Corporation. So General Mills has tons and tons of cereals out there, but then within there they have Cheerios, and within Cheerios they have different lines. And then within Cheerios they have lines like gluten-free, sugar-free, or I don't buy that, but the healthier kinds. there's ones within each. So that's something else. So it just shows how deep and wide it is. Gross margin. This is the amount of money the retailer makes as a percentage of sales after the cost of goods sold is subtracted. So prices in any store format might not vary just from day to day, but minute to minute. And the rise of mobile devices has added a new layer of complexity to pricing decisions. So what this means is that we can check prices of other stores. I can go to Target and I can open up an Amazon app and I can scan a lot of the things in Target, like a DVD or a book or even a toy, and it brings it up on Amazon and I'm able to price compare right there like that in real time. So maybe Amazon has it cheaper. Sometimes Target does. It's, 50-50 on whether or not, Target's cheaper, Amazon's cheaper. But think about that. If you would go into a toy store that only sells toys, they might have higher prices. But we'll get into that a little bit later when we talk about Toys R Us and the category killer. Yes, I said it, the category killer. Okay, we'll see you tomorrow. Thanks, and hope you took some great notes for your quiz in a couple days. Peace out.